Good afternoon this Thursday, September 12th. Well, it was the September WASDE crop production report, and the old crop corn number, which we're going to focus on right now, did do what I've said at my recent speaking engagements and have been implying demand has been great, that they were going to pull old crop down to 1.8 billion bushels. Well, let's take a look at this. Here you are, old crop stocks, corn, old crop stocks, 1.812, 40-some million bushels below the average guess, and well, frankly, 55 million bushels below what the USDA put out last month. Why is this? That's because corn has become cheap, significantly cheap since July. When you think about it, corn was more expensive last fall than it is now, more expensive last winter, more expensive this past spring. Through May 28th, our prices were above world values. Then we had the famous May 28th high, which was for corn, for wheat and soybeans, but corn had already peaked back in early May and started declining and free fell during July. And now during this drop, we have seen in the months of June, July, and August, exports jumping 50 million bushels or more above what the USDA had anticipated for our end numbers, which of course on a monthly basis. For those of you that think out there that corn is just going to stay cheap forever, and trust me, I know there's been seminars out there and they're thinking we're just awash in corn, but these low prices are moving our crop and our carryout surprisingly to the USDA, as it always is, because they're just a broken clock, always only getting it right twice out of a day's period, 24-hour period. They get it wrong most of the times. And I can tell you by a factor of probably 200 million bushels, they're going to have new crop off. So let's go back to the chart. Even though they jumped yield on the corn by half a bushel, we're still down from last month's number. Granted, higher than the estimates, but we are still down from last month's estimates. Now we're going to go forward, and this demand is going to continue to improve when we do the September 30th stocks data. This number up here will come into focus again. And will it be at 1.8 or actually below 1.8 when they do the finishing out of old crop stocks? So you can see how easy it is by just with the ear count that they put out there right now, which is likely to come down because of the dryness that we've seen here in Ohio and Indiana. This could easily slip below 2 billion in the October crop report. And the next thing you know, it's 1.95 as we get towards November. And how is this occurring? Because the cheap prices of corn are selling our corn. Now, as we do look at the yield, yes, they did increase it from last month by half a bushel, but production then was put at 15,186. Now, the soybeans was a surprise here, leaving it unchanged with last month. Granted, nobody was really moving higher by much, but they were hedging their bets it would be higher. This statistically means all this dryness out there, the pea size is going to be reduced. And when they do the measurements in October, this number probably down by a half, if not a full bushel on the national yield, because it's the big states that are getting hit by this dryness, more specifically Illinois with white mold and sudden death syndrome. So this will be to watch in the next month. And of course, as I showed you on Tuesday, I said these numbers would pretty much be boring. Even though corn did come down, this number I predicted would be higher than the average guess. And as always, 11 times out of 12 months out of the years, it is. The estimates are always too low when they come on this one. And in fact, it was higher by 500,000 metric tons versus the last month. But it's something. Next month, whatever this number is, we'll predict this number to be higher. So let's take a look at the action today. Corn, outside day up. Wave 2 likely in. We had our wave 1 up, which started with mostly almost an outside day up. Then we had an outside day down, predicting we were in wave 2. Now we have an outside day up, predicting we're likely into wave 3. Most might ask, what's outside day? Well, it's when you trade below and above the previous day and close higher than the previous day, you get an outside day higher. If it closed back inside this range here, then it's a key reversal. Not as much power as an outside day has. So it wouldn't shock me we back off a little bit, farmers selling on a Friday, but the bias is now turning up in price. So our next stop is going after wave 1, which was a 78% retracement of wave 4, measured to the final wave 5 down. Remember, we came out on August 2nd and predicted 385 was the likely low, and it would occur after mid-August, but before Labor Day. Occurred August 27th, 385. So here we are, moving higher in a likely wave 3 style. Take out 16, heads up to 23 to 24, and so I can envision after we get through the morning weakness here, if maybe there is, we bounce off of this, then we come up and we bounce off of this, then we work towards the measured move target, which will likely line up with this moving average when we get to about 436 to 440, because this wave was 30 cents in length, 31 to be exact. You had 31 cents to today's low of the 397. You get 438. So the target right about here for wave 3. Now this is a minimum expectation. Doesn't mean we can't extend it, but it might take until October crop report. And this here is not to scale for time, okay? Let's keep this in mind. Forget what's going on down here. But the reality is it could take, probably till the October crop report until we get to wave 3. And in the meantime, we will rock and roll for a while. Something interesting, December corn. This is that 2-hour chart. Now the purple line, granted it gets gouged like it did today, but it defines the trend by the curving of the nature. The fact that we have made a positive slope means it should have power holding us in an uptrend. Well, let's zoom in. As of today's close, here we are, back above it. Last Friday, we closed at 406 and a quarter. If we could close tomorrow at 406 and a half, we closed higher on the week again for the 3rd week in a row, and would venture to guess 402 now is very good support on setbacks for the next turn back up again. Beans, same thing here. Look at this blue line. When it's bearish, it was bearish, it was bearish. Got positive. They tried to crowd it Tuesday. They tried to crowd it yesterday, closed back at the blue line. Today, they tried to crowd it through the report, could not take out yesterday's low, closed near the best levels of the day. This is likely wave 4. Now we're in wave 5, trying to get us up to the 1050 to 1065 range. If we take a look at the 2-hour chart, same thing like I showed you on the corn. We could take you back in time, but I zoomed them in. Look at how this line kind of determines. And this is continuation, going from month to month to month. Look at how now the November, when she came on the chart, stalled with this action here. And now we pushed up, and now we came back down, held the purple line, and now here we are, ready to run through the trend line, which comes in around 1025. We go through 1025, we will take out 1030 on our way to something in the 1045 to 1060 range. Note that we want to sell some beans at 1045 in the newsletter. Wheat, well, this was a pop and drop on a missile strike on a ship leaving Ukraine with some wheat to Egypt. Popped higher through the prior range highs, came and closed back under it. So we could call this maybe an A, B. B's can make new highs as long as they don't close above it by much. And a C wave decline yet could be in play before our seasonal lift occurs. Same thing with Kansas. Popped through the prior high, stayed back under on the close. So A, B, C. Possible pullback at to 670 before we try moving more significantly higher as we get towards that last week of September. That's when the seasonals really kick in. Let's talk about cattle. Today, October cattle bolting higher, coming off their highs, still staying lower highs every time like the wheat trade did for months on end. If we look at the intraday chart, here is the 60-minute on October cattle. Note that when we had fallen through this support, we had said when they came back up, resistance would hit at the purple line and where the line intersects. That's where it was. Boom, collapsed, okay? Now we're seeing a bounce. We had stalled out, same scenario, highs and lows, became resistance, could not get through that. Now, interestingly, here we are today, stalled out at the moving average. If there's more strength tomorrow, we will go up to the 180.5 range to probably run out of gas. But for now, we'll see if tomorrow turns lower. If it does, then the market's back under pressure. Probably if the stock market turns lower as well. They've been following the stock market so much it's insane. December cattle today, tagging the trend line. It fell through. So here too, not much above 179.5, and that could be starting another leg down. Feeder cattle are in our wave 4 we discussed, so it's an A, B, C. Should stall out below 43. Now, if it goes through 43, then we're at risk of where 4 can go to 1, and these feeders could probably buck up to here before they get into trouble and come back down again. So tomorrow is an important day, Friday, Monday, to see what these cattle are going to do on their near-term trend. Crude oil. Continuation chart, we had talked about wave 3 bottoming. Initially, we said 3 equals A at 67, but extensions, because it's 3, can go deeper. In Tuesday's video, we said, they're probably going to bottom there at 65 because that was last December's low. Well, they bottomed 65.25, turned up. Now it's a wave 4, should stay under wave 1. So I'd say 71.5, 72 resistance, and then work our way back down lower to the $60 range, probably later into the fall. This big hurricane that we had until hurricane actually hit ground Wednesday, got the bounce going. And so we have a 2-day lift, probably opening a 3rd day setback, and then we try again, do it in a 3-wave structure. So the point I'm trying to say is Diesel fuel, crude oil, gasoline have not bottomed yet. We are not doing any forward buying, waiting for later in the year. Again, likely it's November, December, or January is our window to buy the fuel. Gold today broke out again. Flat top ascending triangle. We had said in yesterday's newsletter, taking out this high would probably start an acceleration. If we don't pull back and get back under the trend line that we broke out from on a Friday, we are heading up to 2,650. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.